Welcome to the Redemptive Economics podcast, where we are empowering Christian entrepreneurs to make a redemptive economic impact here in Pittsburgh and beyond. Let's get to work! Welcome to the show. I am your host, Mike Hatch, and man, I have been waiting for this episode for a long time. We get to talk today with Preston Pysh, probably one of the top 2 to 3 people I would ever want to have on my podcast. So really looking forward to that. But first of all, just let me thank those of you who've joined us here at Redemptive Economics as ministry partners. We are so grateful that you've chose to come alongside of us financially and in other ways as well. Those who have decided to advertise on the show, thank you. This is absolutely completely listener supported. And we need to raise $60,000 for our first year of operating costs. And right now we're sitting at around $10,000 is about what we've raised so far. So we have a ways to go, and man, it would make such a huge difference if God would lay it on your heart to support us in some way. You can follow links in the show notes below. Or you can feel free to reach out to me. You can email me at mhatch@redemptiveeconomics.com. I would love to chat with you, even if it's not just to become a ministry partner. I would love to get the opportunity to meet you, buy you coffee, hear more about your business and your journey. Please reach out. I'm also looking for feedback on this show. So if you know someone who I should interview or you have ideas on topics you'd like me to cover, please reach out to me and let me know. All right, so let me introduce our guest today, Preston Pysh, which many of you may not know if you're local here to Pittsburgh and you're not familiar with Bitcoin. So Preston Pysh is an entrepreneur, investor, author, and Bitcoin proponent. He's originally from Saxonburg, so he grew up here. He bleeds black and gold like the rest of us. He is the founder of buffettsbooks.com, and his videos on financial investing have been viewed by millions of people around the world. He takes great pleasure in taking complex ideas, and you'll hear him do this during the interview, and making them accessible. If you don't already respect Preston for being from Pittsburgh, you will when you hear that he is a graduate from West Point. He graduated in 2003 with a Bachelor of Science in Aerospace Engineering and flew helicopters for the Army. Preston also graduated from the Johns Hopkins Carey Business School in Baltimore, Maryland with a Master of Business Administration, Banking, and Finance. He has authored or co-authored a number of investment and autobiographical works. Preston also wrote multiple finance and investing related articles for Forbes from 2016 to 2018. Preston is also the co-founder of the Investors Podcast Network, which has over 150 million downloads. Preston is the host of the Bitcoin Fundamentals Show, which is a collection of podcast episodes on Bitcoin. All right, folks, you are going to love this interview. You're going to hear a little bit about Preston's journey from the military to the financial world and eventually to Bitcoin. Preston applies his expertise in helping us understand Pittsburgh better from a macroeconomic standpoint. Lastly, he unpacks the value of Bitcoin, especially for the business leader, and we talk about the potential for Pittsburgh to become a Bitcoin mining Mecca. All this and more in our interview with Preston Pysh. So let's go ahead and dive in. Hey, Preston Pysh, welcome to the Redemptive Economics podcast. Man, I am thrilled that you joined me today, man.
Great to be here, Mike. Thank you for the invite.
Absolutely. And you were so gracious because I kind of chased you down after the Thank God for Bitcoin conference and on your way out. And that's I know you got to be one thing right after another during the Bitcoin conference where I saw you.
It's a blur.
You were amazing. Yeah, I'll bet, man. I'll bet. And I made sure to wear my Bitcoin veterans hat.
I love it.
I had a chance to talk to some guys down there. I saw you took some pictures with some of them as well. Mm-hmm. You're, of course, a veteran, a former Army helicopter pilot. And
yes.
So I want to dive into a little bit about your background, just so folks here in Western PA have some idea of who you are. Yeah. And but just to kind of give them a general idea, of course, you've been doing the podcast We Study Billionaires for several years, right?
I think we're over a decade now.
Over a decade.
Crazy, yeah.
That's amazing, yeah. And then, of course, you added in the kind of the subcategory of Bitcoin fundamentals, which is so helpful. I recommend people check that out. And you have Ego Death Investing as well.
Yeah.
And you do that along with several other incredible people like, Lynn Alden, and I know I'm forgetting
Jeff
some
Booth,
others.
and Nico Lechuga, Andy Pitt. Yep. The five of us.
Another one that I would encourage folks here, if you're listening here in the Pittsburgh area, I really encourage you to check that out. There's some other business leaders here that are, I know, involved in that and invest in that too. So you got your hand in a lot, have a lot of influence, especially in the Bitcoin space. But if you would give us a little bit of a background of you, and of course your experience growing up here in Pittsburgh, in Saxonburg.
Yeah. Well, so I was born and raised in Saxonburg, which just north of Pittsburgh, not too far, within an hour of downtown Pittsburgh. I think downtown is a Pittsburgh way of talking, right?
Downtown. You've got it. You've got the Pittsburghese. I hear it in there, man.
I have people that listen to the show from all over, right? And they're like, "Where in the hell is that accent from?"
Yeah, right. I'll bet.
So born and raised in Saxonburg, Pennsylvania, and I went to Knock High School.
Wow. Yeah.
Never really, just that area. And so I got accepted into West Point at 18, and I went off to West Point and was in the military. And so then I was never back living in the Pittsburgh area since. But have all of my family still there, and I come back all the time to visit them and hang out with them. I was just there probably 3 months ago.
Yeah.
I have this just deep love for the area. I really, even though I'm not there, I love the area. I love getting back and just hanging out and seeing family and friends. But what a great place, right?
Yeah, absolutely. Well, I'm curious, in what ways would you say Pittsburgh kind of rubbed off on you?
It's all about family when I'm up there. Yeah. So for me, and maybe that's my bias because I'm away and then I come back and it's very family oriented. But it just seems like everybody is very close with their families, and it's all about that. And for me, that's just really special and something that it feels like home when I go there. Yeah. Despite having not lived there for a very long time. Yeah. That's what I'd say.
It is family oriented, that's for sure. It's also very tribal. People are very close knit within their various geographical regions, and it's
funny when I drive around. When I go back now, as an adult, and I drive around, I'm just like, wow, this is all so much closer than I remember when I was a kid. This always seemed like if I was driving down to Pittsburgh, it's really far away. And
right.
Yeah, it's not that bad.
Yeah. Crossing rivers and bridges. Some people still avoid that here in Pittsburgh, of course. So, all right. So you went to Knock High School, graduated from there. You said you went on to West Point.
Yeah.
Wow, that's amazing. Holy cow. Was that always a dream of yours? Did you always want to?
Yeah. So, it's interesting. So my cousin was he was the head surgeon for the dental, he was the head dentist up at West Point. And we went as a family to visit him. I was 10th grade, I would say. 10th grade when we went, maybe 9th grade. And I went up and I saw the school, and it was super challenging, over the top, difficult with respect to just like the physical rigor, the mental rigor. And I was very attracted to that. I thought that was really neat, and I wanted a challenge, I guess. Proof of work, right? We talk about proof of work in Bitcoin.
Yeah, right.
And I was very enamored by the school, and it was neat because he lived right on the base, on the West Point military base, and so I was able to stay at his place, kind of interact with the various cadets that were there. We went back the following year because I was very interested in the school, and stayed with them again. And I think this is when I was able to kind of shadow a cadet and go around for the day and see the classes and like all that kind of stuff. Yeah. And so like just that whole experience for me was, I was very interested in the school after those experiences. And that's kind of what pulled me towards it. But
yeah. That's impressive, because I've heard some people who attend either something like West Point or like the Air Force what do you call it, academy out in Colorado.
Mm-hmm.
And it is not anything like they would want. Like they're just trying to get through it because it is intense. Like there's no let up. And I hear students at these schools are extremely exhausted all the time. Seneca Hills Bible Camp and Retreat Center is a hidden gem located just north of Pittsburgh in Venango County. Personally, when I attended their men's weekend, I was blown away by the beauty of the surroundings, the quality of the facilities, and the superiority of the cuisine. This is not your typical camp food, folks. Seneca Hills hosts year-round retreats and conferences, but their true passion is summer camp, where campers, both kids and adults, escape the everyday tyranny of screens and distractions and immerse themselves in 250 acres of God's gorgeous creation. Go to senecahills.org or call my good buddy Executive Director Lyndon Fowler to learn more about how Seneca Hills Bible Camp and Retreat Center can help you, your kids, or your business create unforgettable memories, meaningful friendships, and a deeper understanding of God's love.
It's interesting how my perception of the school changed from before attending to while I was there to now.
Yeah.
So like when I was younger and looking at it, it's like, oh my God, this would be so cool. I really want to do this. And then when I was there, it was like, this place is like living in hell.
Yeah. That's what I've heard. Yes.
This is the worst experience anybody could ever have. What in the world did I do? And I never had a moment where I felt like I was going to quit. I never had that moment.
Yeah.
I have many of friends that had quit and had many of those moments, but I never really had that moment. But there was a lot of moments where I was like, just get me out of this place. Like, this is so terrible. What am I doing? And then I look at it now like I've gone back a couple times as a graduate, and this is going to sound so bad. It kind of makes my skin crawl. Like, like get me out of here. I don't even want to be like some of the stuff's funny, and I'm like showing my family or kids or whatever, like, oh yeah, so there's this story here or there or whatever. But like at the end of the day, like I just want to get out of that place. I don't.
It's like a trauma.
It is a little bit of trauma.
Yeah, absolutely. It's funny. I still have that feeling when I just go into schools in general. I was a terrible student, and going with my 15-year-old son to his high school, I'm like, oh, my stomach turned just smelling the inside of the school.
I have the same exact feeling. I can't. And this is so terrible for me to say, especially because I'm like all about like pushing education and whatnot.
Yeah, absolutely.
But, I set foot in a school and I just like my stomach crawls.
Yeah. So how long were you in the Army for?
Whenever I finished my command, which was about 10 years in, right? I hung it up for the flying portion of it, and it was people ask me all the time, do you miss the flying? Is it something that you and I don't really miss it at all, to be quite honest with you. It was a lot of work. It was a lot of work.
Well, it's super dangerous. Isn't being a helicopter pilot probably the most dangerous job in the military almost?
Way more dangerous than people realize. Yeah. I know many of people that have crashed. I know many of people that have passed in those crashes. Right. And at the end of the day, especially in combat, you're flying at night. You got the goggles. You're landing into these fuel and rearm points that are very tight. Sometimes lots of dust, and you can have what's called a brownout under the goggles and like all this kind of stuff. And it can get very dangerous. And this is just like, this isn't even getting shot at. This is just like performing your normal refuel operation type stuff. Right. So there's a lot to it, but it was a good thing I was so young and kind of naive, I guess, because I look at it now and I'm like, what in the world was I doing? But,
man. I'm curious on your perspective on this. As a Christian, they say that there are no atheists in foxholes. Were there ways in which you feel like, as a Christian, that you kind of woke up maybe to God's provision or protection in different ways? I'm just curious.
In that, I've never been asked a question like this. For the people around me, for me personally, that wasn't the case. I mean, I've always been a believer since I was born and raised in a Christian household, and just at the end of the day, love and thankfulness is at the heart of everything I try to do. So that was never something that I really had to think about in those types of settings. And I guess I'm trying to think of it from the perspective of the other people I was around. I can't really speak to that. I don't know. Yeah. I didn't really have too many experiences where somebody came to me that was, having this change. You hear a lot of it after people come back and they went through such horrific experiences, and then they're trying to digest and deal with it mentally, and then that's when there's a lot of changes. But in the moment, I can't really speak to that. Sorry.
Sometimes, no, that's okay. It's sometimes when you're in extreme situations, but at the same, your dependence on God becomes a little bit more extreme or more emphasized in some way based on your circumstances. But also, I mean, when you're a helicopter pilot and you're in the Army, you are so highly trained that it's like second nature, I'm sure, to do what you do, right?
That's exactly what it was. That's such a great point, because I mean, I remember the very first time I was flying, I got a radio call. Somebody was like, somebody's shooting at you and it's coming from this kind of location. And, you just immediately, like, my immediate response was just falling back on all the training that I had. It wasn't anything other than that. And so you start going through the mechanics of these things that you have done so many times. It's like putting on your clothes in the morning. You have already done it, and you're not thinking about that you did it. That's what it was almost like for, at least for me, in those moments. But
man, interesting. Okay.
Yeah.
So then, as after the 10 years was up, what was your goal? What did you want to do when you got out? Was it,
I'm still trying to figure that out, man.
Oh, I get it.
I've always just really enjoyed, like my degree at West Point was aerospace engineering. So I really enjoy math. And I really enjoy just figuring out problems. And for me, even when I was in, I just loved financial markets because they were just tons of complexity. And, I was trying to figure out almost like a Sudoku puzzle or a, that's what it was for me. The investing was that. It was, let me find something that I think that everybody else is misseeing. Let me try to buy that at what I think is a value. And, if I'm good at what I'm doing, well, then I can, make money from not having to like exercise like physical labor, but mental labor. Yeah. And, so I was doing that while I was in the Army. I was investing and, you don't have a lot of money to invest, but it's the process and the protocol that you're developing, very early on. And I was just enamored by financial markets. So stood up the podcast, actually stood up a website before the years before the podcast was even a thing, and had an online forum and was spending a lot of time just writing and interacting with random people on the internet about financial stocks and markets and what was a buy and why we thought it was a buy and the back and forth. And all of that, I would argue, especially on the forum in the early days, I can't even tell you how many posts. It was basically like Bitcoin Twitter these days. Like you get on Bitcoin, and I mean, it's really this aggressive back and forth. This is how this forum was, 15 years ago that I was running. Wow. That there were all these Warren Buffett value investing style people that were on this forum, and we were just sharpening each other's, mental acuity as to what we thought something was worth or not worth or whatever. So it was doing that, and then it appeared that this could turn into a business, and so I just kind of leaned into that, and lo and behold, it did. And I mean,
so you're one of the founding members of, because there's several of you, like 4 or 5 of you, is that right? That are involved in this podcast or that host it?
Stig Broderson and myself are the founders of the podcast.
Okay.
Yeah. Okay. Yeah, and then we have other employees that are hosts for different types of shows and things like that we've hired through the years.
Okay.
But but the forum and the website that I'm talking about, that was something that I did on my own, and then I actually found Stig Broderson on the forum because we were there duking it out, like continuously duking it out on the forum, and then it was like, hey, why don't we do like, just record instead of doing all this work of like clacking on keys. Let's like have a conversation and just record it, and then maybe somebody will listen to it. Maybe 5 people will listen to it, and we'll see what happens.
That's amazing. Okay, so then you moved into doing the podcast. Of course, that has gone gangbusters. I mean, from what I understand, you guys are killing it with that. Are the other guys involved, are they Bitcoiners as well? I'm just curious.
Yeah, I would say everybody at the Investors Podcast Network is a Bitcoiner for the most part. Maybe, yeah, I don't want to say, I don't want to name names, but yeah, pretty much everybody. And even if they aren't, I would say that they're very curious and taking it very seriously at a minimum.
Yeah. Okay.
But most are.
Okay. And then now,
which I like. I like that. I don't want to jam my opinions down anybody's throats. I just want to put out what I think is the truth and the facts, and like, hey, you got to make the decisions for yourself. So
when I love your thought of bringing, I'm sorry, is it Stig? Is that his name?
Yeah.
Okay. Great name. To bring in somebody that, and not that maybe you guys were totally contrary and everything, but it sounds like he was somebody that challenged you and you challenged him. And to bring someone like that to start a podcast with, I think is always great, because you want that. You don't want it to be all from the same perspective, you know?
Yeah, we are both deeply grounded in deep value investing principles of like how we look and value things. So real simply, I would just say, you know, the way Warren Buffett values businesses is he's looking at, and this is gonna make some Bitcoiners chuckle. He would look at the 10-year treasury as a risk-free rate. And so like today, I think the 10-year treasury is what, at 4%? I'd have to look it up here. Let's see. I don't have the chart in front of me, but it's somewhere like 4.5% on the 10-year treasury is what I would guess. And so that would be your hurdle rate. So like if I'm going to make an investment, it has to outperform 4.5% at a minimum. Right. If it's not doing that, well, then why in the world would I buy it? I just buy the U.S. Treasury. So when you go and you analyze a company, I would take the company's free cash flows. I would project them out into the future, the next 10, 20 years. And then what I'm doing is I'm taking each one of those discrete years of what I think those free cash flows are, and I'm discounting them back to today based on the current market price that's being offered on a public market. And when I have those variables, I have the cash flows, I know the market price, I can calculate what the internal rate of return is, the IRR. Yep. And it's a percent. So let's say I took Apple stock and I did that projection, and I know the current market price, and I figure out what the IRR is, and let's say it's 8%. I'm looking at that 8% and I'm comparing it to the 4% that the 10-year treasury is giving me. That's supposedly zero risk. We're not talking about inflation risk or anything else. This is the generic version, right?
Of course, yeah.
And so that you would get a double. Your performance would be double. But the risk that you're assuming is that you're dealing with an operational business that can make mistakes, and maybe their revenues are going to miss, and maybe their product is, getting a lot of competition, blah, blah, blah. So you have to say, well, is that double performance worth it for those risks that you're assuming? And more importantly, this is the final piece of this, I would argue, is what other companies out there that have a similar risk profile as Apple, maybe it's NVIDIA, maybe it's whatever, you can name the company. When I do an IRR on those companies, what return am I getting? Because if I'm getting 12% on one of those companies, well, then why in the world would I buy Apple when I have this opportunity cost of getting a 12% on a company that has a similar risk profile? And this is value. Yep. This is deep value investing of like how Warren Buffett views how he buys everything. And so the forum was like a never-ending conversation like this with pretty much every company on the planet. Yeah.
Man, that is amazing. Okay. And so then describe your orange pill moment or process, if you will. What was it that brought you to Bitcoin?
So it was, I would chalk it up to two main people. First was Ray Dalio. So Ray Dalio is a, multi-billionaire, the founder of Bridgewater, a global macro guy. He became really famous for this way of investing called risk parity, where he basically would go long on fixed income, on bonds, but he would lever it. And he would lever it. And what he found is that when bonds were going up, stocks were underperforming. And when stocks were going up, bonds were underperforming. And so what he did is and the stocks would move twice as fast as the bonds as far as like the price action on it. So what he did is he levered up the bonds so that they were twice as much as the stocks. And what he got over all of this is that they kind of smoothed each other out, so you didn't have as much volatility in the portfolio. And the performance was exemplary because interest rates went down for 40 years while he was running this strategy. So interest rates go down, the prices of everything go up. And so
very convenient.
You run this strategy on something like I just described, and you're going to get one hell of a performance. And he did. So I was studying him, long story short, sorry. So I'm studying him, and one of the things that he always had in this risk parity portfolio was like 15% or 7.5% exposure to gold. And as a Warren Buffett person, that was like blasphemy that anybody would own gold. Like, it made no sense, because Buffett had this example. He's like, if you took all the gold and you put it would basically fit on the infield of a Major League Baseball field, and it would just sit there and it wouldn't do anything. So like, why would you want to own it? Like, it's just a rock sitting there, right?
Yeah.
But Ray had a way more nuanced take on the role of gold throughout time and how it plays a role with money itself and backing, and how currencies fail every so many generations. And I was really impressed with how different this was from the school of Warren Buffett that I had studied for so long. So I started looking at this, and I combined it with my personal opinion that the 2008 crisis was never solved, and that it was papered over, and it was actually made worse through all of this intervention. And I'm saying, hold on a second, like maybe gold would play a role. This is probably 2014-ish time. I was looking at gold. We were talking about it a lot on the show and covering it, and because of Ray. But a long story short, so I felt like there was a role for gold. I was very suspect of like how it was going to be potentially rolled back in from like a global perspective, when you had every country incentivized to debase their currencies for a whole bunch of other reasons that we won't get into. But I was looking at it and saying, okay, so like this might serve a role. I don't know how it's going to serve a role at the sovereign level, because they're just going to debase it again against it. Like, they can't hold up the peg based on like all these other factors that have to do with fractional reserve banking. But it became a hot topic for me. So fast forward 2015, I finally start to hear rumblings and reading things about Bitcoin and how it's basically a digital gold that doesn't require trust of somebody managing the gold in the vault to the amount of paper that's being issued on top of it.
Back in 2015, they were talking about it being digital gold?
Oh, yeah.
That's so interesting.
I mean, you can pull up the first podcast we did in 2015 on Bitcoin, and that's I don't know what we said, but I'm pretty sure we covered it as digital gold.
Okay.
So I'm looking at it as digital gold, and I'm saying, oh my God, like this thing could actually be the solution to this major crisis, fixed income crisis. Because back then we were covering how can they keep compressing yields down to zero and to negative, and they're still being buyers. Like, how is that going to resolve itself? So Bitcoin comes along, it's digital gold. It doesn't require some person managing that peg to the actual physical in the vault to the paper on top of it. I'm saying this is really interesting, and this could actually solve this problem. And so that would be the first person. Then the second person was Trace Mayer, who has become a bit of an outcast because of various reasons. I'll just leave it at that, probably around 2020, 2019. Okay. But very early on, Trace was one of the best advocates in creating just media that you could watch that made a whole lot of sense to me. He was talking about network effects and how network effects, when you're dealing with protocols, is grossly misunderstood, and how Bitcoin fit into this basket of, or this condition of a protocol, and how all these, he had like 7 different network effects that were reinforcing and talking about that. And for me, I was like, wow, this fits it's better than gold, and like all these things that I think people are totally mischaracterizing or misunderstanding. And I'm looking at it as an investor, in an investor's lens of the asymmetric return. I think the value of it, I mean, the coin value of it when I did my first buy was like $220 a Bitcoin. But the market cap, which is the part that I think is really, I want to say that market cap was like around like 5 billion, right? And I was looking at it and I was saying, hold on a second, like at that time, gold was like the $10 trillion market cap. And I'm saying, if this is digital gold, like even if it would take half of that, let's say it goes to 5 trillion, like we're talking, what is that? That's 1,000x return from where it's currently at. It's totally asymmetric. So when we finished the show, I think I even said at the end of the show in 2015, I was like, I'm buying this. Like, I'm sorry, like it might be a long shot, but the asymmetry of it is so astronomically high that I can't not take a position.
So you had not bought any yet at that point in time when you were doing the show about Bitcoin and talking about it being,
No, I did it after that. Yeah.
After
the
that,
day before or the day out, like right there when we covered it on the show is when I bought it.
That's amazing. I love that learning and being in process kind of thing that you do with that, and then to decide right then as you have the conversation publicly for everybody to hear that you make the decision right then. I think that's so cool. Truth at Work executive peer advisory groups are a life and business changing experience. Trust me, I've experienced it myself. It made such an impact on me that I stepped out to become a chapter president myself. At Truth at Work, we're dedicated to helping Christian business leaders who feel isolated and overwhelmed. Our community of like-minded peers are here to help leaders like you live out your faith in the marketplace and build your business on biblical principles. Christian business leaders are transformed through these peer advisory groups that apply biblical truth for living out our faith in all areas of life. If you'd like to learn more about Truth at Work, email me, Mike Hatch, at mhatch@truthatwork.org, or you can email my counterpart, Dave Hartman, at dhartman@truthatwork.org.
Yeah. And the way I thought about the sizing back then, I mean, of course, knowing what I know now, I wish my sizing was like massively different. But the way I was thinking through the sizing, because it was such an asymmetric and such a long, like we knew back then that there were scaling issues, and there wasn't like you hadn't had the SegWit fork or any of that kind of stuff yet. That came way later from when we were covering it. But there was major scaling issues and concerns back in 2015 of like, well, you only have this many blocks. There's no Lightning Network or anything back then.
Yeah.
But for me, the real thing that it was solving was a global peg. It was creating a real global peg that didn't require a human in the loop, which is, in my opinion, the thing that solves all of these major issues in the world right now. So the fact that you couldn't go to a Starbucks and buy it back in 2015, I wasn't really all that concerned about it, because I was looking at it from the lens that the real issue is the fact that you have fixed income and it just keeps getting, manipulated and overbought or overbought, so that the yields kept going to what seemed like an endlessly lower yield. And I was saying something has to step in and stop this. So that's why it was a massive buy for me. It had nothing to do with the payment. For me, the payment stuff is just icing on the cake. Yeah.
Interesting. Okay. Very cool. So then, all right. So then obviously after that, you've been orange pilled, and now the podcast, you've got now that kind of subcategory of Bitcoin fundamentals. You're talking about it all the time. Obviously, I'm sure you went through your 100+ hours of research. Cause I mean, it also sounds like who you are. Like if you're a math guy and you're looking at this from a certain perspective, man, you're putting in your work. Yeah. And I'm sure just loving being able to like pull apart numbers and analysis.
Mike, this is what I would tell you.
Yeah.
So this is one of the most strangest things in the world, because you have what I would say a majority of people buying it, participating in it, creating content or even content around it.
Yeah.
And they don't even understand the problem that it's solving. Okay.
Totally. Yeah.
And I'm not trying to toot my own horn. I just came at this very, very differently. I was studying financial markets, and I was particularly studying equity and fixed income markets. And I'm looking at them and I'm saying, these things are so broke that there's no solution in place for the world for how broke these things are. So when Bitcoin came along, I felt like I deeply understood the problem. And then it was like, oh, well, clearly this is a potential solution. Where I think most people come at it is they come at it from, well, my buddy made a couple $1,000 speculating on Bitcoin, and so then they get involved and they have no idea what problem it's even solving.
Yep.
And it's just one of these really weird scenarios where, especially from like a global lens, like it's almost flipped on its head, where people know about Bitcoin, they can talk about Bitcoin, but they don't even understand the problem the root of the problem that it's going to solve.
Yeah. Yeah, I was fortunate to become a gold bug as well.
Yes.
Kind of learned through the Austrian School, if you will, and come to understand how broken and corrupt our monetary system is, which, when Bitcoin came along, it still took me a minute. I remember, you laugh at this, I remember talking to Jimmy or like messaging him and say, hey, Jimmy, I know, because it was a classic, like, well, is this Amazon or is this the some of the preceded Amazon, and is there something better? And so I was always looking at other things. Like I messaged him about Hedera hash graph, for example. And what about this, Jimmy? Is this? And he's like, literally like one word or one sentence response, right? Not interested, centralized. And it just felt so abrupt and like rude.
Yeah.
You know what I mean? But I know now where he's coming from,
Yeah. And you know what? For a guy like Jimmy who's been answering these questions for more than a decade, you get the same question so many times, and you've covered it ad nauseum that you're just kind of like, nope. Like, I'm going to tell you the answer is no, but you're going to do the work to figure out why I'm telling you so abruptly and so definitively of like why I'm saying no.
Absolutely.
Yeah.
Absolutely. Okay. So then tell me about how ego death started. Because that to me is kind of the next big peg, unless I'm missing one and you want to throw something else in there, but that's a big next step.
Yeah. So Nico, Andy, and Jeff are the original founders of Ego Death with the first fund. Lynn Alden and myself were advisors on the first fund. And, Jeff's an entrepreneur. He's built a company from nothing, took it to, that specific company to like over $500 million valuation. So like he's gone through all these, building literally something from zero way up to, one, the Peter Thiel book. And so he deeply understands the funding process and like what the benchmarks need to look like to really kind of scale a business. And most importantly, a business that has the right founders, a business that's actually creating value, whether that's through a product or service, and a business that's going to potentially have a long-term competitive moat so that they continue to make money, which, if we're taking money from LPs to invest it, responsibly, you have to make sure that it turns into a profitable business and something that society actually values long-term.
Absolutely, yeah.
So they stood up the company. Lynn and I came on as advisors in the first fund. We raised like 26 million-ish in the first fund. And then on the second fund, Lynn and I came on as general partners as well. So it's all 5 of us now on the second fund. And we're raising 100 million right now for the second fund. And what the focus of the fund is we are allocating capital into the Bitcoin ecosystem, because from our perspective, global finance is being rewired. It's being reconstructed, and it's going to look very different than the way it is today. It's going to be very equity based, where everything now is fractional reserve credit based. And in order to do that, like, things look very differently. So from a payments standpoint, we talked, I mentioned that there was no second layer, in the early days. Well, there is now.
Yeah.
And you have the Lightning Network, which is going to be payments. And so you can do crazy things with this, just as like an example. We can do derivatives in a Lightning channel that, let's say you wanted to have dollar exposure. You just wanted the dollar. You didn't want Bitcoin. You didn't want to be exposed to the volatility of Bitcoin. Let's say you live in, you name it. Let's say you live in Zimbabwe, and you want Zimbabwe dollars for whatever reason, right? Maybe all your bills are denominated in Zimbabwe dollars, and you have to make sure you can make those payments at the end of the month. In a Lightning channel, if you and I set up a Lightning channel, and then we put a discrete log contract on top of this, which is basically smart contracting on top of it, we could stream sats every 10 minutes and update the amount of Bitcoin that's sitting on your side so that it matches the spot market of the Zimbabwe dollar. Okay.
Interesting.
So like if you want Zimbabwe dollars, like I can set up a discrete log contract between you and me, and I can make sure that you have that exact amount in Bitcoin terms. And then let's say at the end of the month, you need to pay a bill. You could then go to an exchange and convert the amount of Bitcoin that's there into that one Zimbabwe dollar. You pay your bill and you go away. And where a lot of this is going, like, this is just touching the surface of the tech that's being built out right now, which is totally insane to think you're doing this with derivatives, and there's like not even a Zimbabwe dollar involved. It was all Bitcoin under the hood for all of that. But this is the type of stuff that we're looking at very closely. We're investing in companies that are building this infrastructure, whether it's derivatives or the smart contracting with discrete log contracts, the Fediments, and all sorts of stuff that are being built on top of Bitcoin right now.
Yeah, I saw your tweet about Fediment and its most recent video that they just released, kind of launching kind of the next level. Really excited about that. I've got Fediment. I'm looking forward to utilizing that. I don't want to get ahead of myself here, but I know that some people will, we hear this a lot in the Bitcoin space, but I hear it here in Pittsburgh as I'm dealing with business leaders and such, that, Ethereum does smart contracts and things like that as well. Where is, in your mind, the unique value proposition that Bitcoin holds over Ethereum?
So when we think about building things as an engineer, I'm going to put my engineering hat on here. Okay.
Yeah, great.
Okay. You first want to build, if we're going to build a house, the most important step in building the house is the foundation. If the foundation is built all crooked, well, you're going to have a crooked house and it's going to be a terrible house. There's a reason that Bitcoin is built the way that it is. So there's a thing called and it's very interestingly, who's the Ethereum guy? Buterin.
Vitalik, yeah.
Vitalik Buterin. He wrote an article that was called the blockchain trilemma, I think is the name of it. And he said that scalability, decentralization, and security are the three things that you can only optimize for two of these three things.
Yeah.
Okay. So when we look at Bitcoin, base layer 1, it is optimized for security and decentralization. Okay. Because if it's not decentralized, well, then the state's going to take it over. Okay. And if it's not secure, how in the world are you going to secure trillions of dollars on the protocol level if it's not secure? So, if you're building base layer money and you're saying, I'm going to compromise on decentralization or security, I'm sorry, I think you've already lost. I think you've lost.
Absolutely. Yep.
And the one that we're trading off is scalability on the base layer. Well, the beauty is you can push scalability into a second layer. Okay.
Yep.
While having decentralization and security at the base layer. So how is Ethereum optimized? Well, it's not optimized that way.
No.
Okay. It's optimized for scalability at the base layer, along with smart contracting and all these other things that, in my opinion, make it more vulnerability from an engineering standpoint. But you're giving up decentralization is the main thing that they're giving up. Okay.
Yep.
So I had this argument with Mark Cuban probably, 2021 or 2022. And he was all about Ethereum and everything else. And I was like, okay, well, Mark, good luck running your node at whatever data center you select, was basically my comment to him. And he said,
Great
yeah,
point, yeah.
He goes, oh yeah, I'm running one with my son. And I just kind of smirked I know.
No way.
Yeah.
Oh, that's crazy.
The audio is out there somewhere on the internet.
Wow.
And in my mind, I'm looking at it well, that's a lie. I already know that's a lie because there's no way you're running your own full node.
Yeah.
Right.
Yeah.
So So we're getting to the decentralization, the breach of the decentralization, which is a total state actor honeypot to come in and shut down the server racks because they're not decentralized. So sure, are they doing smart contracting? Yeah, they are. But, here we are 4 years later after some of these conversations where people were like, oh, you can't do smart contracting on Bitcoin. Well, actually, you can. You can. They're called discrete log contracts, and there's many of other things that are out there in addition to this, BitVM and all these other things that you can now do on Bitcoin, layer 2, where there's scalability. And so I'm just looking at it from, again, the engineering side of me is saying, okay, well, what do we want the foundation of this building to look like? Well, we want it to be decentralized and secure, period.
Absolutely.
Can't compromise that.
Yep.
The unique thing about this is if you optimize for those at the base layer, when you go to the second layer, the optimizations for scalability are actually stronger than if you bake them into the base layer. So when we look at the Lightning Network, you could hold up a QR code off of any type of Lightning wallet. I could scan it right now through this video call. You would get the payment instantaneously, and the fee on it is practically nothing.
Yep.
Right? So because we didn't optimize for scalability at the base layer is why it works so dang well and has so much scalability at the second layer. It's almost like a yin and a yang. So these are very technical conversations. I mean, that wasn't a technical conversation, but if you really wanted to dig into like the real why of how they're able to do this from a code standpoint and from a mathematics standpoint, it gets very technical really fast.
Yeah.
But that would be my response to people that are looking at these other blockchains. They don't understand these really, really core and basic principles of like the blockchain trilemma and why you even have a blockchain trilemma.
Jeff Doherty with Allstate Insurance has the distinction of being the very first sponsor of the Redemptive Economics podcast, and I couldn't be happier to promote his services. I've known Jeff for many years now, both as his pastor and friend. And man, I can say with confidence that he is a man of strong faith who aligns well with the Redemptive Economics values. So reach out to Jeff. He can offer you options for a wide variety of coverage and services. He's committed to helping Pittsburgh residents assess their immediate and long-term needs and choose options that will help you achieve your goals. When you want to explore options for protecting your home, personal property, or financial future, Jeff Doherty is your guy. You'll find Jeff's contact information in the show notes. Hey, go grab a cup of coffee with him, get to know him, even if it's just to review your current coverage in case you need to make adjustments. And I promise you're going to love Jeff every bit as much as I do. Yep, that's great, man. That's fantastic. Thank you for that explanation. That's super helpful. You optimize the base layer for one core purpose, to be a settlement layer, right? And then what's built on top of that, you can optimize. Yeah. Okay, so I want to kind of transition the conversation to Pittsburgh and Northwest PA a little bit, or excuse me, Southwest PA. What am I talking about? So I did a couple episodes where I've talked about the history of Pittsburgh, the very unique history of Pittsburgh. I mean, the United States was built by the blue-collar men and women here who poured out, sweat and tears, and then 19th and early 20th century. And then it came to this point where the steel industry, as I say, kind of rug pulled the whole region. Now, they were doing what they thought best was for business, right? So I'm not saying that in a way necessarily that has some moral connotations to it in some sense, but it really left this region reeling. And so you've got different pockets, naming some that folks would know, like Homestead and Aliquippa and Ambridge and Arnold and New Kensington and Katanning and these places all around the Pittsburgh region that are still trying to recover today from what happened to the steel industry and the coal industry, kind of the flight. And then as a result, you got people like yourself who are like a Pittsburgh diaspora all over the world, right? Who left to find work in other places. You being a macroeconomic guy and just I've loved gleaning so much of that value from you. I'm curious about applying that perspective to the Pittsburgh or the Southwest PA kind of region, because we could go back pretty far to Nixon taking us off the gold standard in 71 and looking at some of the the repercussions that played into this region and the industry here. But what are some things that I'd love some perspective from you in terms of what you see in terms of how that transpired here?
Yeah, everything has every action has an asset and a tethered liability to it. So as an aerospace engineer, when I'm calculating and I'm figuring out the lift equation, I cannot perform a lift equation for an airfoil without having a subsequent drag that's associated with that lift. It comes with it. It's tethered to it. So what was tethered to the petrodollar system? Okay. When we came off the gold standard and we said, okay, well, we're going to provide security. Everybody's got to denominate all their energy in dollars, and we're going to basically create this dollar network effect around the world, which gave us a tremendous asset as the United States that we are anytime we clack on the keys and we create some more dollars, we're the first ones to get them, and we can do anything we want with them. Okay, that's a huge advantage. So the question is what is the liability that is tethered to this asset? Okay, and here it is. you will export your jobs, your physical jobs, and all your manufacturing capability out of this country. That is the tethered liability to this asset of, dollar dominance. Okay, here's why. So it becomes a currency arbitrage scenario over decades. Okay, because what happens when we're playing this game is since nobody's on any type of peg, what countries figure out is, well, if I go over to China and I'm playing with the yuan and I debase it very heavily, what I'm doing is I'm creating for a foreign buyer, the United States, it becomes very cheap for them to hire my people because the local currency, the yuan, is so weak. It's very cheap for them to export their work over to me to do. And then what happens is those dollars that are being freshly printed here are flying out of this country and going over to China, okay, in exchange for the goods and services that they're providing. And then they basically store that and save that in U.S. treasuries, which then kept going down, which, the yields kept going down and the value of the treasuries kept going up. And so they want to keep playing this game. And the way that currencies work, floating currencies that have no peg, because none of these currencies had a peg, is if China devalues their currency, what's happening on a relative basis is the dollar is getting stronger, which is further incentivizing us to buy and purchase goods and services over there. Okay.
Oh, wow.
So then what do we have to do? We have to respond in kind. We have to try to weaken the dollar a little bit, which makes theirs stronger. And then what do again? They just weaken it again, which ratchets up the dollar, the value of the dollar relative to it. And so this continuing decades long, and it's not just China, it's literally every country around the world. And if a country can, the stronger the dollar is relative to that other local currency, the more incentive you're creating for the work to be performed inside of that country because of the currency arbitrage that's happening. So this played out since the gold standard. It just happens very slowly, and it happens at a pace that your everyday person is looking at it and be like, yep, there goes another job out of Pittsburgh. Like, I just don't understand why we just can't. And everybody looks locally, like in the region, and they're saying, I just can't understand why we can't get our act together. And then they blame the local politicians and everything. And some of it's valid, but on a very large, like if I'm really going to zoom out at like an 80,000 foot view of like what's playing out is dollar dominance has a cost. The cost is you're going to lose your jobs and your manufacturing locally inside the country. This is why, I'll put my military strategic lens on, right? Or hat on. People saying that, oh, well, we're just going to, we'll rough up China and we're not going to let them do this. I'm sorry, but like all the precious metals and all these things that go into your F-22s and F-35s and all your, war tech and all that kind of stuff, guess where a majority of this stuff comes from? It comes from China.
Wow.
Right?
Yeah.
So if you think you're going to lay the screws to them over like clacking on some keys because they're selling treasuries or whatever, you're going to stiff arm them out of SWIFT and like all these things that these boneheads are saying in DC, like they're totally lost on the idea that our world runs on physical things. Okay. Those physical things you cannot offset by clacking on keys and creating more imaginary units of the dollar. And they think that they can because it's worked for so long. And the reason it's worked for so long is because they kept, sliding the yields on the fixed income market down for 40 years. Now it's pegged, and now it's starting to come back up because inflation is manifesting itself. Because this is another really important, like really big theme. When you do this for decades, what you're getting is actual efficiency. Okay, you are optimizing efficiency on a global scale. Because of this currency arbitrage, you're basically gearing everything for peak performance until it's not. Okay. And what I would argue is all of the math, all of these decisions to do this for 40 years basically peaked at COVID. And COVID was kind of this really interesting mark in time. I'm not going to get into whether it was a manufactured crisis or it was a real crisis. I'll let you decide. Right. I have my opinions. I have very strong opinions on this, but I'm going to leave them to myself. Okay. But I find it really interesting that demarcation, snapping of the chalk line of everything changing is, in my opinion, is going to be that moment in time. And what you're getting is an unraveling of that efficiency. You're getting an unraveling of the net producers of the world that are providing all these physical things to the people that are net consumers of the world, us. Basically all of NATO's a net consumer, and the rest of the world, all of our enemies are the net producers. And they're basically saying, we don't want your treasuries, we don't want your dollars anymore, because we know you have to like basically create a debt spiral, and they're going to be worthless, and we don't want to accept that as a form of payment anymore for this physical work and things that we're delivering. So back to Pittsburgh. Sorry, this is a very long tangent.
Perfect.
But when people look at Pittsburgh and they're saying, like, I just don't understand like how it used to be this booming town and now it's all gone. That is a really big zoomed out picture of the why. Pittsburgh's been it's through all of this, healthcare and education has PNC Bank is there. You got some financial services. You have some advanced manufacturing, but the technology and innovation in the healthcare and education is pretty much what Pittsburgh evolved into, which is very service-based, which is very local, servicing local population-based, okay? Which shouldn't surprise anybody, because we're still living here. So like what would it evolve to if you can't do this manufacturing process anymore because of the currency arbitrage and it basically taking all the jobs? Well, you go into these types of healthcare things and you go into all that. The other really big thing that I would tell you about Pittsburgh is the methane has become very big recently. And as a Bitcoiner, this is, in my opinion, a pretty big opportunity for the region to be a mining Mecca, if you will. When we look at mining, when we look at mining, I would characterize it as three things are going to make a great miner. First and foremost, you have to have cheap energy. If you can't get the energy at like really cheap prices, you're dead on arrival. There's no way you're going to compete. And this is a very cutthroat industry, to be just frank, because it's global. Yeah. There's going to be incentives in some jurisdictions that are going to, because they're going to figure it out, and they're going to figure out that these guys are actually writing the blocks, which basically makes them like almost like a central bank in a way, because if they can write the blocks, then they can ensure the transactions get in faster, blah, blah, blah. Whole nother story. But politicians that figure this out and do everything that they can to try to attract this into their region are going to have a huge advantage over other people in the future. So if you're a politician in the Pittsburgh region, I would highly encourage you to try to understand why I'm saying that. The other thing that so the first one is you have to have cheap energy. The second one is you have to have a region politically that is not going to create turbulence and volatility into your operations of your business. So should they set up some type of public-private partnership? Hell yeah, they should. Right?
Yeah.
If I was a miner and I had the local area, the Western Pennsylvania area, come to me and say, hey, we want you to be here for 2 decades, and we're going to do all these things. We're going to give you these tax incentives. We're going to create all these that they're not reversible, whether some, like, whatever you got to do, you need to do that, because that's what these people need that are setting up these mining operations. By the way, it's going to strengthen your grid. Because if your electricity starts to peak and it gets expensive, they're going to turn off. And now you have like all this extra energy in the area for those types of conditions. So if you think this is weakening your grid, it's because you don't understand what you're talking about. The third thing that they need, and this is more for the miners themselves, is just operational excellence. Because it's so cutthroat and because it's so difficult, you have to be lean, like Lean Six Sigma up the wazoo. Like, you have to be really, really efficient in your operations. You have to be really smart in understanding the cycles and when you're buying hardware and not overpaying for hardware, how much leverage you're incorporating into the business. And I could go on and on and on. It is extremely complex, tons of variables, lots of moving and dynamic variables in order to be a successful miner. So those are the three things: cheap energy, a friendly environment, jurisdiction politically, and operational excellence are the things that they need. And I think Pittsburgh is very ripe for that. Now, energy costs in Pittsburgh, I think your energy cost for like cents per kilowatt is probably like, I don't know, 13 to 15 cents per kilowatt, which is pretty expensive, to be quite honest with you. But I think a lot of that expense for the local citizens, this is like if you own a house in the Pittsburgh region, you're probably paying these prices. I think a lot of it is actually politically driven, and actually because of some of this green
Oh,
don't get me started.
That's big here. I
Yeah.
know.
But that doesn't mean that if you go on the industrial side, I'd be really curious what the industrial rates are. But I know the retail rates for like the homes are pretty high, but it shouldn't be. You guys are exporting energy. You are a net exporter of energy, which tells me you have it in abundance. In Bitcoin mining, like instead of having to transport it thousands of miles, you can use it right on site. So there should be a big incentive for Bitcoin mining to be in the Western Pennsylvania region.
TBD Bookkeeping is who I use for my bookkeeping needs, and I'm thrilled to recommend them to you. As business owners with 3 kids themselves, Ryan and Danielle Hatch understand the value of time and the importance of work-life balance. TBD Bookkeeping can take over the day-to-day bookkeeping of your business so you can focus more on growth, operations, and customer relationships. I can speak from experience. If you're a business owner, you need a bookkeeper, and TBD Bookkeeping is simply the best in the business. Find their contact information in the show notes, and when you mention Redemptive Economics, you'll receive 10% off your first 3 months. Call TBD Bookkeeping today and learn more about the benefits I've experienced. More time, peace of mind, and the ability to plan for the future. Man, I'm so grateful that you said that. And I love your the macro perspective that you brought to our region and what happened during the 80s or 80s, 70s ish.
Yeah,
when
for
the steel
4
industry
decades.
left.
Yeah,
they because so many folks when you're on the ground like that and you don't have that macro perspective, I mean, all you see is what's up close, and there is still this really big divide, and how do I say it? Skepticism when it comes to the managerial and the labor kind of relationships here. Unions are huge here as a result of that, right?
Yeah.
But a lot of this is misplaced in some sense, misplaced in trying to determine the cause of what happened. There are other things at play, either however you want to think about it, underlying or bigger overarching kind of things that played into what happened here. So I'm so grateful for your perspective on that.
Yeah.
So you mentioned mining. So let's talk a little bit about Bitcoin as just in general, because I know a lot of folks here in the Pittsburgh region, especially among the faith-driven community here, they're just starting to get to understand it a little bit. Myself and some other business leaders here are beginning to kind of try to introduce and educate people about it here. And so can you give your own kind of summary explanation of why Bitcoin is so important and the value of it?
Yeah. First and foremost, if you had to figure out the cost of the existing financial system, especially from a central banking standpoint, what would that be? And first and foremost, when we have to look at the debasement cost, okay? So if I'm taking the entire supply of money in the world and I'm debasing it at 8%, that's how fast the U.S. is debasing it. And how I can see this is in an M2 growth rate, okay? If you take the M2, pluck out any 10-year period you want, run a compound annual growth rate equation on that growth over that 10-year period, and what you're going to find is it's about 8%. Okay, this is
real quick M2 just for folks so they know, because I know folks are going to be, what is M2? What are you talking about?
So I would have to look up the definition because it's a very long definition. There's a lot of things in it. But think of money. Okay, so like you pull out $1 out of your pocket, that's baseline M0 money.
Yep. Okay.
Then you start getting into M1, you get into M2, and what you're doing is you're expanding, and this is how convoluted money is, right? This is how convoluted it is.
Absolutely.
Is credit a promise between you and me? Like if we went into a bar tonight and you were the bartender and I was buying a drink and I opened a tab, we just created money in the definition of like how, M2, whether that's M2 or M3, I'd have to look it up. Okay. Right. But we just created money out of thin air, okay, that you could then take that promise of the $10 I owe you and go trade it, okay, before I pay it at the end of the night, which is then expanding the money supply even more. Okay, so I use these as examples, and I could type in M2 here and give you the definition, but
no, that helped. That's good.
But what people need to understand is the money, the quote unquote money, is not like the dollars in your pocket. That is one form, and that's the baseline, and it's very small. The amount of baseline money is very small. Okay. So when I say that the M2 growth rate is expanding at about 8%, this is them controlling the dials, allowing how much banks can create and then lend out. But that growth rate over time is about 8% annualized. Okay. So that's a real cost to everybody participating in this system. This is taxation.
Absolutely.
And it's a fixed rate. So like if you make $10,000 in a year, like you're basically living in a tent. Okay. Versus somebody who made 10 million last year, guess what? That 8% is equally being paid by both of you.
That's right.
Okay. This isn't like the person making 10 million is paying more than the person who made 10,000. They're both paying the 8% through this debasement. This is the US's debasement rate, which is one of the best in the world at 8%. Okay. So going back to what we're talking about, which is like, what is the cost of the existing system? Okay. Because we're not even talking salaries. We're not even talking infrastructure. We're not even talking the 1,000 people that go to Jackson Hole every year and have their steak dinners and then come back and like probably didn't even make a decision, and their staff are just like clicking and clacking on keys to keep expanding at 8%.
Yeah.
Right. So what is the cost of this system that we're currently using relative to Bitcoin? Okay, that's because as an investor, as a value investor, going back to some of the stuff I talked about very early on, it's all about opportunity cost. So people will look at Bitcoin very generically, very stupidly, and they'll say, "Oh, it's burning this much electricity every year. It's bad." End of critical thinking.
Right.
It's bad relative to what? So let's define what it is we're comparing it to. And, all these perturbations and all this volatility that we're seeing in markets is because they're on the freaking controls and adjusting the dials. That's why it's like this. That's why you have so much malinvestment. Dude, I could get into stories that people told me from these triple P loans going through COVID and all this stuff. And it is insane, the amount of misappropriation of capital into the hands of just whatever, just to make sure there's enough of liquidity in this legacy system.
Yeah. And I like what you said. You insinuated this maybe, that look, if this is so, if the monetary system in our economics is hard to grasp and understand, one of the biggest reasons is because of how dishonest and inflationary, and I mean, just it's a shell game, and in some ways you're not meant to understand it.
Yes, absolutely. That is absolutely true.
Yeah.
So let me provide another example that would help make why Bitcoin is so important. So imagine you have two tables and you have four people sitting at each table and they're playing a game of Monopoly on each table. Imagine one table that a fifth, the banker, let's say the banker isn't playing, but the banker's there, and the banker is flooding that board with additional currency. Okay. But the other table is playing by the rules and they're not flooding the game with the currency. But in this unique setup of these two tables sitting side by side, the one table where the currency is just flowing in there, they have all this extra money, they can actually go over to the other board and buy the properties on the other board in addition to the properties on their board.
Oh, wow.
Okay.
Yeah. It totally changes the rules of the game.
It totally changes everything. It changes the dynamic of everything, because what you have is the table that's cheating starts to own everything.
Yeah. Yep.
Okay. They own everything on both boards. And then the players on the additional board that was playing by the rules, all of a sudden they just don't own anything anymore. And they're just paying bills as they go around the table. Okay. This is the Cantillon effect. This is what you get when you have a country that has a currency dominance versus everybody else in the world. They get first bite at the apple because they just clacked on some keys and created more currency into the system. So the second table, what they're going to do is they're going to respond in kind, and they're going to start cheating too. And then they're going to try to start buying the stuff back. But in order to respond back to them, the table that was originally cheating is going to create more currency and just battle them. This is what's been happening around the world for 4 decades. Okay.
Yeah.
And the U.S., there was nobody cheating better than the U.S. at clacking on the keys and creating more units. And again, if you start to own everything, and you start to be this player at the board, everybody else starts to become a debt slave to the few people that are controlling the game at this point.
Yep.
The jobs start going somewhere else on the boards that are losing the worst, right? Because it's the cheapest to pay them. All that stuff starts to become very illuminated. So imagine we could come into this game, the setup of these two boards, and we could wave a magic wand and say, nobody can cheat anymore, regardless of how bad you want to. And like the amount of units are fixed in both boards.
Yeah.
That's Bitcoin.
Yep.
So and
That's
what
awesome.
what is that worth? What is that worth to society as collectively? What is that worth? I would argue it's you can't even put a value on it because it's that important.
Yep. That is, so what you described before, that the Cantillon or Cantillon effect that you mentioned that happens, and the illustration of the two Monopoly games is fantastic. It's very helpful to understand because in Scripture, we know that that God called Israel, he's setting up Israel as his nation to what he describes as just weights and measures. And he's talking about money. God cares very deeply about the fact that we have honest money because of these second and third order effects that happen that we're the most marginalized and vulnerable are exploited as a result of this these games that they play. And so, what you described in the Monopoly game with the two boards and money being infused in there, that's where we are as America, as a culture right now. And God is not pleased with that. Just throw this out there. Isaiah 121 says that it says, once you were a faithful people, now you're unfaithful. And he uses the description of your silver has become dross, which is the idea that back then they were using precious metals and they mixed in other metals in order to debase the currency, expand the monetary system so that they could afford things that other people on the lower rungs could not afford. It's a very dishonest, corrupt way of doing it. And there's so many different victims, in a sense, along the way, not just here in the United States, but all around the world.
Yes.
Right. And which is why we say that Bitcoin is such a redemptive monetary technology that can literally, as the word insinuates, redeem, buy back, value, and especially in people's lives.
Yes.
So,
yes.
yeah.
And at the core, I think there's a lot of emotion attached to this word money. But if you really go deep and you really look at it from a first principle standpoint, what is money? Money is your energy, right? Like, I'm going to perform some type of skill for you, whether that's a product or a service, that is efficiently. It's better off that you buy it from me because the amount of time and energy it would take for you to produce that thing is actually more than it would be just to buy it from me. This is energy exchange. This is harnessing my natural skills versus your natural skills to exchange and cooperatively be both of us better off through that exchange. Okay? There's things I can do better than you, and there's things you can do better than me, and we are willing to trade for that, and we're willing to exchange our energy for that, and that energy is just a unit or a token or whatever you want to call it, which is money. And just imagine, like, you and I exchanged, and I bought something from you, and I thought I paid 10 units for it, but I actually paid 11, even though I thought I paid 10. And right. you knew I paid 11, but you didn't tell me. Right?
Yeah.
There's something inherently wrong with that. And what we're describing through all this macro talk that we're talking about, it's very easy for us to look at it on an individual basis and say that's bad. But for whatever reason, maybe there's some type of psychology term wrapped up in this with respect to groups, and I can't remember what it's called. But like, when you get a group to collectively cheat, there's some type of psychological bias. I forget what it's called, but that's what's playing out on a nation scale. Is you have collective cheating, which the human brain and the way that we react, we don't think it's as bad or immoral, and it is. It is.
Yeah, I've come under or felt great conviction about it's going to sound crazy, but my mortgage, I've got a decent sized mortgage. Well, where did it come from? And in fact, I talked to Jimmy Song about this on a previous podcast that, well, I actually stole value from everybody else who holds a dollar to be able to get my mortgage and buy my house. That just feels wrong, man. That's not, it's very, very corrupt.
Yeah.
So.
Yeah, and then that gets into a very long moral discussion as like, how do you act appropriately in this scenario? And, I don't have a good answer, but
and
I know I know how to benefit from it the most from the math standpoint, but that, is it moral? I don't know.
Joe Hadoba and Hadoba Consulting is who I use for my promotional and marketing needs. Joe is a seasoned professional with 2 decades of experience in the dynamic realms of sales and marketing. Throughout Joe's journey, he's witnessed the ebb and flow of businesses, understanding intimately what it takes to navigate the fine line between success and failure. His diverse background spans industries from logistics to banking and advertising, giving him a comprehensive view of the entrepreneurial struggle. And I can say that from experience, he understands us. Those of us who are entrepreneurs. In every role, his focus has remained unwavering, driving business development, spearheading impactful marketing strategies, and fostering sustainable growth. Plus, when you work with Joe, you will learn a ton through the process. I speak from experience. So reach out to Joe today. His contact information is in the show notes, and you will be so glad you did. Yeah. No, well, so interestingly, as you say that, because one of the I think things that happens to us as people when as you said, we're all group cheating, basically. Envy plays a role in that as well, because, anyway, I'm not going to go into those details either, but there's a scarcity mentality that plays out as well for us as people, because it feels like you have to keep getting as much as you can, because it's literally a melting ice cube. The money is right in your hands. And I would say that here in Pittsburgh, in Western PA, Southwestern PA, it is, man, do we struggle with that here, because we've had so much taken, and there's so much distrust of others, especially those in authority. Talk a little bit about, if you would, the change in mentality that you see, that maybe you saw in yourself, but you see in others as they do embrace Bitcoin, this honest money, this just weight and measure.
When we look at society and we look at the cultural rot, I'm not saying that this makes it right. I'm just saying that it makes sense that this is what we would be seeing. When a person can't, well, let's just use this as an example. If you're playing a video game, okay, and you get past level 1 and you get to level 2 and you made it halfway, you're like, okay, well, I'll play the game again. And because I have a little bit of skill, I should get a little further in the game. And so you start playing it, and you didn't even get past level 1 the second time you played it. Then you play it some more, and now you're not even getting halfway through level 1. And then you play, and you see where I'm going with the trend.
That would be frustrating.
Who in the world wants to play this game?
Yeah.
In fact, the person playing this game wants to take the controller and start bashing it off the console.
Right. Yeah.
Okay. I think that that's an example of how a lot of people in the world feel right now. Is they're getting more skilled. They're working harder. They're working 2 jobs. They're working 3 jobs, and they actually feel like they're taking steps back and not forward. And you do this to a person enough, and they start to develop this very dark cloud of how they view everything in the world, because the world you should be able to operate inside an environment. You get more efficient inside of that environment. This is just how our brain works. It gets more efficient. It pushes it into the subconscious. You don't have to use your neocortex to start like thinking deeply about it. You just naturally get better and more efficient, and life should get better, right? It should. But that's not how things are being experienced by most people. And so what a lot of people start doing is they start throwing their hands in the air. Instead of hitting the game console with the controller, they're actually going out and doing things that they normally wouldn't do if they felt like they were progressing in the game of life. And I'm not trying to justify the cultural rot that we see everywhere in the world right now, in the U.S. But what I am saying is we need to have empathy for these people that are acting this way, because some of it's a function of this corrupted, deeply corrupted system that we're operating inside of. And when I look at Bitcoin and I look at the hope that it brings, I think it's going to reverse this trend, but it's going to take time. And I think that because when you start dealing with a unit that you're not stealing the $11, even though I thought I paid 10, and I'm paying 10 and I got the 10, like that's just, you get a whole different set of incentives that pop out of that throughout society. And people start to feel like they can actually play this game and win at the game of life, that they're not being robbed. And so I think some of that cultural rot starts to really reverse itself and start going the other way. And you actually have abundance and you have giving and you have love being spread around the world, because at the base layer of this system that we're functioning inside of, it's changed. It's rewired itself.
Yeah, absolutely. Absolutely. It's a great point. We don't even realize the role we play in it ourselves too, because you're just used to playing the game. You're taught from such an early age. I remember being taught lessons about, banks and money and all that kind of stuff. And it's all within a certain frame of reference that when something new comes along like this, that kind of shifts the ground underneath you in such a profound way, man, it's hard to even comprehend what some of the impact's going to be long term.
Yeah.
So if you would go through just some of the key, because again, having you share it, having you verbalize this, I think is going to be really impactful for people to hear. Some of the key traits of Bitcoin, kind of the technology philosophy behind it that makes it such honest money.
At the end of the day, it has a terminal number of units. So, like using the Monopoly example, just imagine that there's, 5,000 units in the game, and there's never going to be more, no matter how much somebody kicks and screams and tries to manipulate the game. There's only 5,000. And what you get through this is if somebody overextends themselves and they're not acting responsibly in business and life and everything else, well, they have to sell things at a fire sale price, because they have to offset their poor decision making. A person who was very responsible, who was saving for the rainy day. I mean, look at the forest. Look at trees, right? We can get 50-mile-an-hour winds and the trees don't blow over, because they're acting. The nature is acting responsibly, and not having this 25% less roots into the ground. It's still building out the whole root structure for the bad storm that's going to come with 50-mile-an-hour winds, and it's still going to stay up in the ground. That's how nature acts. But through this system where the money supply is expanding, you're incentivized to not act rationally and to go out and press your luck and do all these things just to try to stay afloat. So Bitcoin is rational money. It is a fixed supply money. It is a money that is actually decentralized, that no single entity can go and change the rules. And the people that are deciding to run the code are highly incentivized to do that. And it's at a very low cost to do that. It's not Mark Cuban running a data farm of Ethereum.
Right.
It is a person running a Raspberry Pi that cost them $200. That's running literally every single transaction since the Genesis block of every single Bitcoin transaction, because it's actually decentralized and it's low cost to do it. It's
very transparent.
Very transparent. I can literally look up any single transaction since the very first block. So it's all of these things, and at the root of it, it's a fair system to exchange your energy with any human being or entity on the planet from anywhere in the world without anybody's permission, any jurisdiction. I could send $1 billion to China. I could hop on a flight and carry $1 billion worth of buying power in my head with the private keys of such account. These things are ideas that almost seem like they're written into the laws of the universe through mathematics, that they will exist. Not that they should exist, but they will exist for humanity. And that's very exciting for me. Like very, very exciting.
Dude, absolutely. Absolutely. So a couple of thoughts that are in my head. Number one is as you were sharing this too, is that really incentivizes saving, right?
Yeah.
Saving is like a necessary prerequisite for production, right? And I think we have it backwards in the current structure we have, the current corrupt monetary system, that instead we reach out ahead through debt to try to pull back and then produce. If you would talk a little bit about your thoughts on that, and then I want to transition to, and maybe this will provide the bridge, but to incorporating Bitcoin as a business.
On the first point, as far as savings go, if you perform some work and you can just freeze it in a safe and it's not worth less tomorrow, well, you're only going to use that savings if you have something that is going to benefit society through efficiency with another product or service. And until you feel like you can do that with a high probability, you're not going to risk that money in the vault that isn't becoming less valuable tomorrow, right? The challenge is if you put it in the vault and it's worth 10% less next year, well, now you're being forced to go out and do riskier things because you have to move the money because it's just getting less and less valuable. It's dying in there.
Yep.
And so what you find is your whole incentive structure changes as to how you're allocating money into productive and efficient things because of this shot clock that you're up against. And it changes that. Like there's no shot clock anymore. So now you can start acting very responsibly. And I think this, when you look at nature and the way that it preserves its energy and the way that it thinks about, I said thinks about, the way that it,
yeah,
which is a whole nother topic.
Yeah, we could take that a whole nother way, right? Well, yeah, and from a Christian perspective, we would say that that God has kind of instituted these laws, these immutable laws that we're, as an engineer, you're kind of required to abide by in order to be productive.
Yeah.
And when you have money that can just be printed, like you said, it's clacking on a keyboard to print more, you're living under the delusion that you can circumvent those laws, basically.
Yes.
Until they impose themselves upon you, and you fall, or whatever, gravity takes over.
There was a second part to your question that I
I was thinking about some of the business leaders here in Pittsburgh, how to begin to incorporate Bitcoin into their own business.
First and foremost, you have to be profitable. Okay, you can't stick any excess energy into the vault if you're not actually producing excess energy.
Great. Yes.
Okay, that's first and foremost. If you are basically breaking even, I don't even think that you can store or save in Bitcoin because there's too much variance, and you're just and Bitcoin has a lot of volatility relative to the legacy units, the dollars and the euros, like 70 to 80% annualized volatility. Okay. So if you're taking this excess energy and you're plugging it into this vault and it's oscillating and moving like crazy, and you might need that for the rainy day, you have to think very hard about like how much you're putting into the vault because there's so much variance. Now, over the long haul, when you compound Bitcoin's performance over the last decade, it's banging out at least like 50% annualized. Okay, so that energy that you're putting into the vault today, because of the growing network effect, when it gets to 20 years from now, this isn't going to be the case. At least I don't think it's going to be the case. But where we're at right now, and the fact that it's achieving this network effect similar to the dollar did through the petrodollar system, okay, because of that, it's actually appreciating in buying power relative to what people are used to dealing with on a day-to-day basis with the dollar, okay? But in order to participate in that, you have to be profitable. You have to be, having excess. The next thing I would tell you is if you are profitable and if you do have this excess, the math really kind of comes down to, can I invest operationally in my business by either going upstream, downstream, a new product line, whatever it might be. Let's say you made $100,000 and you want to invest that operationally in your business for some other product line or whatever. Can that $100,000 that you're investing perform or return at about 50% annualized? And if the answer is no, okay, which, some small businesses, that can actually be pretty easy to do, depending on what it is, okay, especially small businesses. But that's the math. And what's interesting is the math on the legacy system would tell you that hurdle rate that I'm describing of 50%, the legacy system would tell you that hurdle rate today is 4%, because that's what your 10-year treasury is.
Right.
Okay. Which I think it's probably even worse than that if you're actually accounting for inflation, because I think inflation is probably going to be at least 4%. So you're actually, like it's worse than that. But let's just say these numbers very generically. Legacy system would tell you it's 4%, and me as a Bitcoiner, I'm telling you it's 50%. How does this change the way you think about allocating your retained earnings of your business? It changes it a whole lot.
It does.
Right?
Yes, it does.
And what's interesting is these numbers aren't just for a small business, a coffee shop down the street. This is for every multi-billion-dollar large cap company on the planet. These are the numbers, whether they realize them or not. And they're going to realize them here pretty soon. I think in the next 4 years, they're going to really start wrapping their head around some of these numbers. And the numbers are mind-blowing. The numbers are mind-blowing, because if that's your hurdle rate, like, oh my God, like you pretty much, especially if you're a large cap business, you pretty much have to plow everything. And this is why Saylor's doing what he's doing.
I was literally going to say that. Yes, that was my next. Yep.
He's a large cap business. I wouldn't say by revenue standards, but by sheer market cap standards, he's a large cap business. And, you know, how's he acting? He's acting by plowing everything he makes into Bitcoin. And I think he's acting extremely rational.
Yeah. Once you understand
the
utility of this technology as an honest money, oh my gosh, it changes everything. It absolutely changes everything. Yeah, absolutely. Man, that's great. So I just think I'm excited about, as you mentioned earlier, the potential for Pittsburgh to be able to engage with Bitcoin, and whether it be on the mining side, integrating it into business, that changes your incentives and your values in some ways. You know, we talk about low time preference, high time preference kind of thing. And as Christians, we should have the ultimate high time preference already. We should technically. Yeah. But we're not immune to the way a corrupt monetary system affects us. And so, of course, our time horizon gets really short too. But man, I just think Bitcoin has such an incredible potential to redeem in all sorts of profound ways. Our city and our area here, the economy, as people, it's funny, you hear a lot about people coming to faith in Christ as a result of learning about Bitcoin. In fact, at Bitcoin Veterans, I talked to Gary Krause. Did you get a chance to talk to him? Again, one of the guys over there.
Yeah.
Okay.
Maybe though. Yeah.
He's an engineer by trade, and it was seeing kind of those immutable laws as they were revealed in Bitcoin and its design that kind of brought him back again to his faith in Christ. And so you're seeing that as well. I just see so much potential for it to have such an impact here. And so,
no doubt.
So I'm really grateful for your time, Preston, you've given me, Mike, for the opportunity to share. And I just hope folks will follow up and learn more from you. Go to your podcast and all these other any last minute. I want you to share. Obviously,
do you guys ever do meetups in Pittsburgh?
Oh yeah, definitely. Okay. Yep, we're still small, we're still growing, but man, it'd be amazing to.
I would love to come to something next time I'm up that way.
Okay.
Yeah, I would love to come. I'll shoot you an email or whatever, and hopefully we can sync up in real life. Yeah. That
would be amazing, man. Absolutely. That would be amazing. Any last minute thoughts you want to give just for folks here who are listening and the business community, faith-driven business community? Yeah.
There is so much hope on the horizon. That's my message. Because when we look around, and especially if you're watching the mainstream drone networks, it's just, it's almost like they want you to be scared. And what I would tell you is this world that I'm looking at through the Bitcoin lens is so fascinating, first of all, but so hopeful. And it's going to usher in so much opportunity for people that can dial in and understand what it is and understand how it rewires incentives so that we can help one another and that we can be productive and efficient towards each other and caring and loving to each other. And there is no other moment in history that I would rather live than right now. And what an exciting opportunity, man. Like, this is going to be this coming 10 years. You wrap in the AI and stuff. I mean, it's going to get weird. This is going to get really weird, but how exciting. How exciting. And I'm very hopeful for what this means for humanity. And at a time that looks so dark, I think that we are on the precipice of something just monumental and huge and beneficial to humanity.
Yeah, I agree. And I forget, are you I assume you're familiar with the fourth turning?
Oh
book
yeah, yeah.
Okay.
Yeah.
Okay. Yeah. So that's
I'm pretty sure we've done a podcast. There's few books out there that we haven't done a podcast about. I'm pretty sure we've covered it, but it's hard for me to remember after a decade. But yeah, I'm well versed.
That was my mentor early on. It was one of the first books he turned me on to check that out, to understand kind of from that perspective. And yeah, we're in the midst, as far as I'm concerned, of that fourth turning.
Yeah.
And things will probably get dark. We'll run into the crisis. I mean, we're starting to feel crisis, and to your point before, I've talked to so many people recently who've ended up in the hospital from panic attacks, anxiety attacks.
Mm-hmm.
I think what you said earlier is so true. People are really struggling, trying to keep up, getting to the end of themselves. But this is where, like you said, the hope comes in with Bitcoin, which can be so powerful. So, all right. So how can folks find you, Preston? Where can they go to connect with you?
I am active on, I refuse to call it X. I'm active on Twitter.
I know. I still call it Twitter too.
I do not like this X business. I'm active on Twitter, just at Preston Pysh. And I try to respond to most comments and questions. I have a podcast. It's called We Study, the feed is We Study Billionaires. I have a Bitcoin specific show that I personally do every Wednesday where we talk about the new technology and whatnot. But if you're anybody interested in business in general, that's what the whole feed is about, is business and valuations and different billionaires that have done some amazing things. Self-made. We only study self-made billionaires because we like to study the story.
I didn't realize that.
Yeah.
Okay.
Yeah.
That's interesting. Very cool.
Yeah. We never cover politics. So if you don't want the political spin, we don't touch it. But yeah, that's where people can find me.
That's awesome. And then hopefully eventually at one of our next Pittsburgh Bitcoin meetups, folks can have an opportunity to meet you there.
Yeah,
so this episode will be released around September, October. So we'll see how it goes with that. So we'd love to have you in town.
I need to get maybe November, December. I might get up that way. I've got a little bit of travel. I've got a little bit of travel between now and like the end of October, but maybe November-ish. We came for Thanksgiving last year.
Okay, yeah.
I have a cousin that's does these house party / Thanksgiving thing at the end of November.
Big family gathering.
Yeah, I think we might be coming up for that. So maybe something around there. Yeah.
That would be amazing. I will plan for that time during Thanksgiving break there. That would be amazing to have you there. So, man, Preston, thank you so much, brother. I really, really appreciate your time. Thanks for joining us today.
My pleasure, Mike. Thanks for having me.
Let's get to work.